Welcome back, my awesome people. In today's episode, I will be discussing what this recession is all about and what it means to me. Will I be buying, holding, or maybe even selling my assets? So stay tuned because I will be highlighting two stocks that I will be dumping all my money into during this recession to greatly profit once we come out of the recession, in which we definitely will, as history has shown us. Now, the possibility of an economic downturn has become a major point of discussion. About a month ago, the stock market officially entered a bear market, a market term for a fall of more than 20% from its peak. After the S&P 500 recorded its worst week since the early days of the coronavirus pandemic in 2020, inflation is at a 40-year high, interest rates are rising fast, and signs of a cooling economy are showing up in retail sales, job ads, and the housing market. Bear markets often accompany recessions, even though one does not cause the other. But when investors turn away from stocks, worries about the economy are often a major factor. Past recessions have been marked by widespread layoffs, bankruptcies, higher borrowing costs, and turbulence in the stock market. No one, and I say no one, can predict the future, but it's vital to remain calm, gather facts, and make moves to protect your financial position. Recently, the Federal Reserve hiked the biggest interest rate increase in 28 years, raising the rate by 75 basis points in an attempt to control rampant inflation, which hit a new peak of 9.1%. 9.1%. And the Bank of Canada raised their interest by a shocking, which no one expected, 100 basis points, trying to cool their current inflation, which is at about 8%. Both countries are pretty much screwed. Inflation has remained high throughout 2022, and economists and financial experts worry we're headed into a recession. These experts have their eyes on gross domestic product, or GDP, which is the value of all goods and services produced within a country during a specific period, which is a key metric used to gauge economic growth and recessions. In the first 3 months of 2022, the US's GDP dropped by 1.4%, likely due to a spike in COVID-19 cases and rising inflation. The war in Ukraine and shakiness in the stock market only piled on to the increase of the economic woes. When GDP falls during 2 quarters back to back, technically the country is in a recession. With mounting anxiety about an impending major recession in both the US and Canada, you may be concerned or at least a little curious about what this may mean for your finances. Well, first let's see what typically happens in a recession. Since every recession varies in terms of length, severity, and consequences, we tend to see more layoffs during economic downturns. Accessing the market for credit may also become harder, and banks could be slower to lend because they're worried about default rates. If both the Federal Reserve and Bank of Canada continue to raise rates to bring down inflation, then we will see an increase in borrowing costs. So even if you qualify for a loan or credit card, the interest rate will be higher than it was in the prior year. We're already seeing this in the mortgage markets, where the average rate on a 30-year fixed mortgage is over 5%. And this is the highest level since 2009, after the 2008 housing crash. With stocks in a downward spiral for weeks and actually months by now, many want to know how a recession could impact their long-term investments. Should you stop investing? The answer is no. Do not stop investing. At least not if you can help it. Avoid panicking and cashing out just because you can't stomach the volatility. My advice is to avoid making knee-jerk reactions. This may be a good time to review your investments to be sure you are well diversified. Historically, it pays to stick with the market, as the S&P 500 has nearly risen 150% since its lows of 2009. However, if you desperately need the money you have in the stock market to pay for an emergency expense like a medical bill, and there's no other way to afford it, in that case, you may want to look into loan options rather than selling your stocks at a massive loss. And for many of us, it's about more than 50% of a loss. And if you decide to take out a loan, commit to paying it back as soon as possible. Remember, it's important to know that recessions are a normal part of the economic cycle. Long-term financial plans will always experience some declining periods. Since World War II, the markets have had about a dozen or so recessions, and they typically end after a year or so. Periods of expansion and growth are more frequent and longer lasting than periods of decline. And hey, my awesome people, if this video gave you something to think about or maybe to put on your watch list, subscribe to the channel to get all my updates and investments. And follow me on Twitter at Jacob Rant and on Instagram. And if you want $25 of real cash money for free to buy your favorite stocks with, sign up with my Wealthsimple link down in the description box below and start investing. While we are at all-time lows for many companies, here are two of my recession-proof stocks that will only have crazy growth once we are out of this recession slump, but also pay a high monthly dividend until we do. My two stocks are Hamilton's Enhanced US Covered Call ETF, ticker symbol HYLD, and the Purpose Ether Yield ETF, ticker symbol ETHY. I have not done an in-depth video on HYLD yet, as that will be coming in the next few days, but I have done an in-depth review on ETHY, in which you can check out my video to get an inside look on this ETF and my views on it. But to give you a brief summary of both, HYLD holds 7 US equity covered call ETFs with a sector mix similar to the S&P 500. They expose the investor to diversified blue chip US equities with a higher yielding alternative to investing in the S&P 500. This includes healthcare, technology, gold producers, and so much more. So this ETF is US focused and pretty much covers the entire US market. So simply put, when America's economy isn't doing too well, this stock will take a dip, just like right now. But when the US economy is doing very well, this stock performs very well. It is currently down from all-time highs, which makes sense as the current US economy isn't doing too well. And while you patiently wait for the US economy to recover, why not get a monthly dividend? And the best part is you can buy this stock in Canadian dollars and avoid the conversion fees and withholding taxes if you held it in a registered account. So for me, this is a pretty low risk stock as it pretty much tracks the American economy. So if America does well, then yay. If America does not do too well, then yay. I still get an incredible monthly dividend. And my second stock is ETHY, which is pretty much an ETF that tracks Ether, or most well known as Ethereum. It is an ETF that holds 100% Ether while writing covered calls. You can buy this stock in Canadian dollars as well and avoid the conversion fees and withholding tax if you hold it in a registered account. And the best part is you get all the Ether cryptocurrency exposure without all the crypto fees and tax-free sheltering in your registered accounts while getting amazing monthly dividends. So yes, this ETF is highly risky because it is not diversified at all, and its underlying holding is already a high risk asset. So if your risk level is pretty high, then this ETF is just for you. So Jacob Rant, what is your next move during this recession? What are you going to do? Well, my awesome people, this is not my first rodeo when it comes to a market crash or even a recession. I was around during the '08 bubble, even though I was not an investor, but I was definitely watching the economy. And of course, the most recent one, the COVID crash of 2020, where I pretty much took the risk and bought my favorite stocks, in which a few months later, they all broke their all-time highs. And through both those crashes that I witnessed, the market still came back bigger and stronger than ever. I believe it will be at least 6 to 8 months, approximately beginning of 2023 to mid 2023, before we really feel the recession, as these interest hikes both on the American side and the Canadian side still have a few more hikes to go. And as rates go higher, so will everything else, causing panic and fear. And what did Warren Buffett once say? He said that it is wise for investors to be fearful when others are greedy, and greedy when others are fearful. And we clearly saw that the past few years, as the market has been hitting all-time highs and everybody was greedy and buying companies without any due diligence, and the crypto market was jumping by thousands of percent, with most buyers buying into hype and FOMO and not really for the actual utility of the cryptocurrency. So what this all means is it is about time that we enter a fear market. And this is when we, including myself, should be greedy. I promise you, my awesome people, in a couple of years, those that were greedy during this time of fear, they will reap the rewards. So let's become bear market millionaires. And remember, my awesome people, just like all the investments I mentioned in my videos, please do your own due diligence because I am just a clown on YouTube. And again, if you are watching this video and do not have a Wealthsimple trade account and you want free money to trade with at $0 commission fees that won't eat into your profits, sign up with my Wealthsimple link down in the description box for $25 of free real money to trade with. Link is below. So again, I am not a financial advisor, so make sure you do your own research and consult your own financial professional. Thanks. There is so much wealth out there for all of us to get a piece of. So by allowing our hard-earned money make us more money is the key to wealth and the key to financial success. Subscribe, like, and share to help out the channel so you will get notified of when I post my penny stocks, REITs, dividend, and speculative stocks, and any other investments that I am buying or selling. I want everyone to have the opportunity to get out of this work-life trap by buying back their freedom through investing. So let's all ride together on a journey of health, love, success. So until the next video, stay ranting.